Hello, I'm Tom Copeland. I'm an attorney, author, trainer, and advocate for the business of family childcare. In this video, we're going to talk about how do family childcare providers pay themselves? Well, let's start with how do you earn money? As a family childcare provider, you're earning money from a variety of sources. Parent tuition, any fees from parents, subsidy payments, including parent co-pays, money from the Child and Adult Care Food Program, those reimbursements, you get grants, other sources possibly of income. All these are reported as income. Now, if you're incorporated as an S or C corporation, you're treated as an employee of the corporation and are paid a salary. You're reporting your salary as income, and your salary is subject to payroll taxes, so you get paid as an employee. But if you're not incorporated, and if you're a sole proprietor, also called self-employed, or you're what's called a single person limited liability company, you aren't an employee of your business. You're the owner. You don't pay yourself a salary because you're working for yourself. In other words, you can't pay yourself $20 a week to clean your home. No. All the money you earn caring for children is just automatically yours. Well, what can you do with the money that you earn? Once you receive it, you can do whatever you want with it. You obviously will spend some of it on business stuff, house-related expenses, toys, supplies, food, and so on. But you can also use it for personal purposes, clothing, vacation, take retirement, savings, whatever you want, because it's yours. What about having a separate bank account? As a sole proprietor, you're not required by law to have a separate business bank account. Now, some banks may say to you, well, if you're running a business, you need to have a business account with us. Okay, some banks may require that. But it's not a requirement just because you are a sole proprietor. And most family childcare providers don't have a separate business bank account. They got one bank account, all their business income goes into there, any personal income and business and personal expenses are paid out of that. It doesn't matter how money is paid out. It doesn't matter whether you have one or two bank accounts. Now, some people hear the expression a draw. What's that? Some providers who have a business and personal bank account transfer money from their business account to their personal account and then call it a draw. Now, a draw is language sometimes used to describe how a provider can pay themselves. Some providers like to take a draw as a way of tracking how much they're taking out of their business for their personal use. It's another way of tracking how much they earned each year after expenses. Now, in the end, this doesn't matter. It doesn't matter what you call your income. It doesn't matter whether you take some money from one account to another and call it a draw, or just transfer it to another account and don't call it a draw, or leave it in the same account. It doesn't matter, because no matter where the money is, it's still all yours. Now, what are the tax consequences here? If you take money out of a business account, it doesn't become additional taxable income. It doesn't create a tax deduction. You can't deduct what you pay yourself. You can't deduct a draw because it was always yours anyway. You don't pay any payroll taxes on money you take out for yourself. You're not an employee. So, let's look at as an example. Let's say you earned a total of $60,000 from all sources. And let's say your expenses were $20,000. Therefore, your profit is $40,000. And let's just say federal and state income taxes are $14,000. So after taxes, you've got $26,000 in your hand. Now, you can do whatever you want with the $26,000. You don't have to pay yourself since it's already yours. You can leave it in one bank account, you can move it around to other bank accounts, you can do whatever you want with the $26,000. It's yours. Do you have to pay yourself a salary to get Social Security benefits? No. No. Social Security taxes are based on your business profit. And your taxes will show up on an IRS form called Form 1040 SE that you're filing with your taxes each year. What you pay in Social Security taxes will help determine how much you're going to receive in Social Security benefits. So don't worry about this issue of a salary or a draw. It's only have to worry for Social Security purposes based on filling out that form and paying those taxes when you file your tax return. How do you pay yourself with a grant? Most grants, if you get, might say you can use some or all of the money to, quote, pay yourself. Well, how do you show this? You can show it by transferring money from one bank account to another and say, make a note saying that's paying myself. Or you can write yourself a check. Or leave the money in the same bank account where the money came into and just write down on a note that says, some of this money, all this money is for myself. In other words, it's just language. The money, you're just telling the grantor that this is money for myself. All right, that's what I have to say. If you're not an S or C corporation, which most providers are not, then you don't have to worry about paying yourself a salary or wages because you're not an employee. The money you earn, you can use to pay for business expenses, and then after that, the rest is yours. You can do whatever you want with it. You don't need to do anything more in terms of paperwork. So good luck. If you have questions about this, I'm happy to talk about it. I don't charge anything for trying to answer your question. Send me an email at tomcopeland@live.com. Go to my website. You can read a lot more about the business side of family childcare. So good luck. I'm not providing you with legal, tax, or professional advice as part of this video. So if you need that kind of help, you need to seek it out. This video was funded by the Child Care Communications Management Center, which is funded by the Office of Child Care, the Administration for Children and Families, the U.S. Department of Health and Human Services, and was developed in partnership with the National Center on Early Childhood Quality Assurance, which is funded by OCC, the Office of Head Start, ACF, and HHS. This video can be duplicated for non-commercial uses without permission. So, thanks very much for listening.